What's up, everyone? It's Kadi with MoneyVest. So, what a week in the markets. Fed is out of the way, inflation is out of the way. Next week, we're probably going to get some GDP numbers, some consumer sentiment, but for the most part, we are done with all major economic reports and earnings for the year. It is about done, and we've only got a couple more weeks left. Of course, Christmas is coming on fast, and markets are going to start to slow down a little bit in terms of that volatility and volume as well. Today was also triple witching Friday. We did see a lot of momentum in either direction, and of course, a lot of volatility in the markets. And the T-Vol index also did spike on the day as well. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate that. And links to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the members only private videos. I've opened up a few more spots so you can take advantage of our community. There's a 16% annual discount that's available till the end of this month. You get access to all the intrinsic value spreadsheets, fair values, watch list, private videos, and Discord access with over 20 plus channels, trade alerts, trade ideas, buy and sell alerts, options alerts. Everything's going to be included as well. Also, do check out the courses, fundamental, technical, options, and psychology, and definitely do connect with me on Instagram as well. I do post a lot of interesting stories, portfolio updates, P&L statements, and of course, a lot of other interesting tips and strategies. Handle's going to be CAS WRP as well. So markets on the day, S&P 500 basically about as flat as it can be, just over 4,700, with the NASDAQ up to 14,800. So slowly and steadily kind of closing in on 15K, with the Dow Jones obviously trading at an all-time high at over 37,300 as well. So very, very significant move to the upside for the Dow. For the NASDAQ, S&P was more or less flat. Now, I do want to point out to our analysis on Enphase. I definitely want to start there because Enphase did have a phenomenal week, up over 20%. And this right here has been the entire move over the last 5 weeks. Enphase is up over 71%, back up to almost $124 per share, as the US 10-year treasuries have dropped under 4%. So we are now at 3.913%. And you can kind of see the correlation because in the last 4 to 5 weeks, we have seen the yields drop over 17, 18%. And that has obviously caused the markets to be very risk on, more specifically in some tech and growth areas, and more specifically solar, with Enphase pushing higher up over 70%. Now, I did a lot of videos at the time in October, of course, when Enphase did drop on the back of those earnings and the guidance. We did see, of course, a lot of skepticism, a lot of pessimism around Enphase Energy. This right here is from November 14th, so literally about a month ago, right? This is how quickly things change in the markets, right? So nothing really is permanent. I think that's one of the biggest lessons to be learned, is that nothing is going to last forever. Nothing is going to be permanent. The only constant is change, and we have to be understanding of the fact that things will constantly be changing. New variables, new information, new evidence, new stuff will constantly be coming out. And as a result, if we fixate ourselves to one type of view or analysis or perspective, we're just going to be opening ourselves up to huge amounts of disappointment. So we have to be adapting and understanding that things will change. And this is from November 14th, so literally about a month ago, when Enphase was trading as low as $88. We talked about how wait till the yields are sub 4%. This is what I said in the Discord. Like, literally just wait until the yields are sub 4%. And here we are with the yields under 4%, and Enphase has rallied over 70% to over $123. And this is, in my opinion, only a beginning, right? Only the beginning, because Enphase, as I mentioned in our previous updates and videos, and even in our Discord, is not a terrible company. It's not a bad company. I'm back in the green in Enphase, right? So I'm back positive now. We talked about how Enphase is not a bad company. It is a very good company. Our methodology, our analysis of looking at quality companies is still sound and still pretty good, right? Just because the price action fluctuates so much, just because there's a lot of volatility, just because the stock price is selling off, does not make the company a terrible company. So I think that is something that we all have to be aware of, and understanding that just because the price action is volatile and stock's going down does not make the company a terrible company. Something to keep in mind. Now, going over to the heat map, this right here is the entire market. So Amazon, Microsoft, Oracle, Nvidia, a lot of the stocks. Of course, Magnificent Seven kind of pushing higher once again, with other parts of the market starting to pull right back down. You can see that from the overall market. Amazon, Microsoft, Oracle, we did have Nvidia, we did have Google, Meta slightly pushing higher. Costco was up another 4.5% on the back of a price upgrade, and everything else was struggling and down in the last day. And this right here is again the performance. So we did have about two sectors in the S&P 500 pushing higher. Everything else was down. And in the last 1 week, of course, most sectors were green except for comm services. And in the last 1 month, energy is the only sector that's kind of struggling. Everything else is up. Palladium, natural gas, volatility, wheat, lean hogs, oats, everything pushing higher, with silver, canola, cotton, and platinum pulling back. And we did have Bitcoin up to over 42,000 and Ether just over 2,200 as well. So yields continue to crack below 4%. 3.9 is where we are. TMF has also had a phenomenal week, up over 15%, up 0.5% to over $66 per share. It's rallied over 73% from its lows of back in October. So again, congratulations to anyone who's trading or investing in TMF. I genuinely am very happy that this trade is finally starting to play out as expected, and TMF continues to rally, Enphase continues to rally, Tesla also on a huge move higher, and of course Bitcoin is also moving higher. So Mara, CleanSpark, Riot, GBTC, everything's been pushing higher and very much on a strong momentum. And Mara was up a little bit over 9% this week. In the last several weeks, it's up over 147% as well. Volatility continues to be very, very muted, still trading as low as 12.27. So again, I'm super cautious. I'm cautiously optimistic in this market because yes, there's been a lot of momentum. There's been a lot of the summer seasonality kicking in, driving the stocks higher, but understanding of the fact that we are overbought along with volatility that's really low. When you combine those two things, that definitely suggests some caution in the market that can be employed considering where we are with the technicals. So as I mentioned before in my previous market updates, for the rest of December, I wouldn't be surprised if markets continue to move higher on this very nice rally, and there's a lot of momentum to the upside. But going into January of 2024 is when I do expect maybe a spike in VIX and of course pullback in the overall market. Now going over to the Bitcoin and Ether analysis. So if you come over to BTC, 42,000 is kind of hanging up there pretty well. Next resistance and target is going to be $47,051,000. So inside this red rectangle is where we are at for that next resistance and target. For Bitcoin, with the support level sitting inside this green rectangle at 31,000. And right now it's kind of hanging up there very, very nicely. We've got a decent support at 40K for Bitcoin as well. And Ether also coming up to its resistance, pretty much trading inside this red rectangle. And that is a resistance for Ethereum as well. And a breakout above 2,500, 2,600 could send us to potentially new all-time highs. And that's going to be a target all the way up to 3,500. But right now it's kind of coming up to its resistance at the moment, trading sideways in that level. And support level is going to be sitting roughly at about 1,100. Crude oil starting to move back higher, but this is the overall downtrending channel of lower highs and lower lows. It's coming up to a resistance at $73, $74 a barrel. So this right here is going to be that level to watch as a resistance for crude oil. And as a support level is going to stay put at $66 per barrel for crude. And this right here, again, is the downtrending channel of lower highs and lower lows for crude oil as well. Very, very important indicator because this is really what kind of directly and indirectly affects inflation. Now going over to the market, S&P 500 first continues to move up, coming up to its resistance of 4,700, overbought absolutely at over 78, 79 RSI, and the MACD also overextended. It's coming up to its resistance, and this week the S&P was up over 2.5%, so massive move to the upside. It's less than 3% away from all-time highs. So 4,800 is going to be next in case we get a breakout above this resistance of 4,727. That is going to be another level to pay attention to. NASDAQ, on the other hand, also continues to move higher. RSI extremely overbought with 76, and so is the MACD. Support level is going to stay put at 14,600 to as low as 14,400, and of course all the way up to 15,400. Another very important target and resistance, and of course the all-time high sitting well over 16K for the NASDAQ as well, less than 10% away from all-time highs. I mentioned this in my Instagram story. I mentioned that investing is a result of both patience and consistency, and that is very, very true. And I think everyone needs to, as much as we can, try to implement high levels of patience and consistency, because when the markets are going down, it's very easy to believe or think that we are going to continue to go down and this is it. We need to get out or not buy or we are done. But as I said earlier in the video, nothing lasts forever. No trend, no specific company, stock, nothing, no dominance, nothing lasts forever. Everything is changing constantly. And with that in mind, we have to make sure that we employ right strategies, be patient, be consistent, and of course take advantage of when the markets are giving us the deals and the opportunities. Because back in October we were talking about how now is the time, get your cash ready, start deploying some cash because markets are down over 20% from all-time highs, volatility is over 25, 30 levels, and this is the right time in my opinion to be deploying cash. Now I'm kind of on the other side of the spectrum where it's not like we need to start selling. It's not like I'm selling aggressively in this market with overbought, overextended levels. No, I'm just not deploying cash at the moment because of how overbought and overextended we are and how low the volatility is. So there's a huge difference there, okay? Just because we are overbought doesn't mean it's a straight up sell signal. It simply means that the risk reward is not that favorable on the long side. And for that reason, I'm not really buying any stocks at the moment, especially when you consider there's not a lot of deals anyway. There's nothing that kind of stands out. They're trading at really, really low valuations or cheap valuations or trading at really oversold levels. Nothing that kind of stands out at the moment. If you find something, please feel free to let us know. I'm happy to do more research and analysis on that, but I'll be on the lookout for potential trade ideas as well. And in the meantime, we'll be looking at selling calls because that's what's going to benefit if the markets do end up coming down. If the volatility does spike, calls will benefit because that's a hedge against potential downside and a protection against potential downside. So that's where the plan, and that's what I'm planning on doing going into next week. So next resistance target, 15,400 for the NASDAQ. Now going over to Apple. And Apple here, pretty much at an all-time high at 197, 198. Support level is going to stay put at 196. So we're kind of hanging up there at very, very overbought, overextended levels. There is a little bit of a negative divergence forming for Apple. And as we discussed, it can kind of stay up there at overbought levels for a very long time. So it's not unlikely to see Apple trading at those levels. And next support really is going to be down to 189, close to $190 per share for Apple moving forward. Talking about Amazon here also support level is going to stay put at about $148 per share. So that right there is going to be that level to watch with the RSI just really trading sideways. MACD also trading sideways. And of course, we've seen a lot of consolidation for Amazon. And of course, a breakout above this is what we're seeing with a nice resistance up to 149, 150. Next target is going to be $161 per share for Amazon. Tesla here, on the other hand, with a very nice breakout to the upside. Resistance going to be $269 per share for Tesla, and support level is going to stay up at $240 for the company. So again, we're still very much in the context of this downtrend and lower highs and lower lows. So right now we've just been trading in this downtrend, lower highs and lower lows. And next resistance and target is going to be $269 to as much as $270 per share. So this right here is going to be that level to watch, and support levels can stay put at roughly around $240 all the way down to inside this green rectangle, sitting between sub 200 to $210, $212 per share for Tesla. Talking a little bit about PayPal. And PayPal's also had a pretty decent week. It did drop a little bit close to 1% on the day today, but next resistance is going to be $65. So this right here is going to be that level to watch, with the support level is going to stay put at $56 per share. So this right here is going to be that near-term support. Very nice consistent move to the upside between that higher high and higher low pattern. And like I said, it's kind of like a show me story. We still have to wait and see how Alex Chriss kind of executes PayPal's plan of higher growth, but it has rallied a reasonable 22-23% in the last 3 to 4 weeks. Talking about Visa, and Visa here continues to trade at an all-time high. It did gap down a little bit and then got bought up fairly quickly. So red on the day, but a huge green candle, and support level is going to stay put at $250. So this right here is going to be that level to watch, all the way down to $245 per share for Visa moving forward. Talking about NVIDIA. And NVIDIA continues to move higher, back up to almost $489 to $500 per share. And of course, this right here is going to be that red rectangle to watch as a resistance, and of course support level is going to stay put at $400 per share. So we've seen a lot of consolidation for NVIDIA right here. It's just been going sideways, and of course, like I said, support level is going to stay put at $400 with a massive resistance now sitting at $500 for NVIDIA. Advanced Micro Devices up another 83 basis points. It's seen definitely a very strong rally to the upside. Massive support sitting here at close to $130. And of course, the next target is going to be $156 per share. So this right here is going to be that next resistance and a target for AMD. And support level is going to be below 130, is going to be closer to $112 per share. Very, very overbought and overextended, of course, 76 RSI with the overbought MACD. So wouldn't be surprised to see some profit taking, some potential downside for advanced micro devices as well. Talking a little bit about Meta platforms, and Meta here continues to move up 0.5%. Next resistance and target's going to be $352 per share, with the support level is going to stay put inside this green rectangle, set roughly between $315 and $330, all the way down to as low as $275 per share as well. So those right there are going to be some levels to watch. Of course, a very nice higher high and higher low pattern, consistent uptrend with the resistance sitting all the way to 352, like I said, and support level inside this green rectangle for Meta. Talking about Netflix, and Netflix now consolidating sideways in that range. So 450 and 485 is going to be that level within which it's been trading. And of course, we got a much stronger support at 348, 345. And it's also got a little bit of a gap, actually a pretty big gap to fill eventually if it may or may not come down to those levels. But right now, lots of consolidation sideways in that resistance here, 485, and a support level sitting roughly at 450. So that $30, $35 range is where Netflix is trading sideways in. Google here also trading sideways, lots of consolidation. So big tech really, if you've noticed, hasn't really done anything in a long time. It hasn't really gone anywhere except for Apple, maybe even Microsoft and Amazon, I would argue. But for the most part, Nvidia is trading sideways, Tesla is trading sideways, Google's trading sideways, Meta's trading sideways. I would argue even Nvidia and AMD are trading sideways. So they haven't really gone anywhere. So we got a massive support for Google at 126 and a resistance at 140 to 144 for the company. And then finally, we got Microsoft, and Microsoft here also just trading sideways, pushing higher a little bit from that support of $366, so getting bought back up. Resistance at $384 for Microsoft, and of course, a much stronger support at $340 per share for the company. Costco continues to move higher. It got a price upgrade today, massive week, up almost 8%, but it is now incredibly overbought and overextended. It's only a question of when, not a question of if. As I've mentioned before, it's gone up parabolically very, very nicely. So strong move to the upside. But of course, there's no doubt in my mind that eventually there's going to be a time where Costco does pull back quite reasonably, maybe 7, 8, 9, 10%, considering how overbought it has now become. And this has happened time and time again. This was an 8% pullback. This right here was a 6.5% pullback. This right here was a pullback of about 6% again. This right here was a drop of a little bit over 11%. This right here was a drop of a little bit over 17%. So it's very normal. It's a very common thing where it gets overbought and pulls back 7, 8%, 8, 9%, and then rallies back higher. That's how markets basically work at the end of the day. And finally, end phase we've already covered, but next resistance is going to be up to as much as 131, 132. This right here is going to be that level, and of course, we're back above that resistance originally, and now this is going to be a huge support at close to $108, $109 per share for end phase. So hope you all enjoyed this video, and what a strong week we've had in the markets. So definitely do check out the Instagram link. Handle is going to be CASWRP. Definitely do check out the courses and join our Patreon and our Discord, 16% annual discount until the end of this month. And let me know in the comment section down below, what do you think about the markets, and of course, how this week was in the markets for you. As always, happy investing. I'll see you all in the next video.